that it's in.
Thank you for that idea, Amitabh. So we've been stock specific. Before we wrap this interview, what are your disclosures?
Yes, sure, Nikunj. I think it's safe to assume that all the sectors and stocks that I've talked about, I have a vested interest in. Nikunj, I think it's safe to assume that all the sectors and stocks that I've talked about, I have a vested interest in. And we, as you've already mentioned, are investors, and we actively invest in most of these companies that I've talked about, and we put our, money where our mouth is. So that's what I'd like to say there.
Okay, it's a flat market. A good rally of about almost 15% in 2012 due to the kind of gush of liquidity that we've seen. Are you still bullish at these levels, or do you recommend taking chips off the table?
We've had by most people if you'd asked this question back in December. But I think this rally is to be viewed in the context of global liquidity rush that we've seen this year, and further accentuated by the recent announcements by Mr. Bernanke on the possible quantitative easing additional round of the QE3 as it's known. Of course, the valuations were extremely favorable and cheap back in December, early Jan, and that also acted as a trigger to this rally. But I don't think the rally is necessarily over just because we've gone up about 15 or 18% this year so far.
Morning, Amitabh. Nikunj Dalmia also joining in. So what is your market call? At these levels, our market looking slightly toppy, or is the risk-reward ratio still in favor of going long?
But like I said, with $4 billion odd of funds flow that we've seen so far, if markets could have moved so strongly, and 4 billion is a pretty small number in the global context. So if the funds flow continue, then I would not like to hazard a guess as to the sharpness of the move. Of course, from the previous downturn, markets did a lot faster, as we know. So it's if you use history as an example, there is a lot of upside left, but I would still not like to bet on that. I'm a little suspect of the funds flow, and it could we'll just have to keep watching out for how the situation pans out in Europe and with global risk aversion. So a lot will depend on that in the global markets. At least one good thing is that the underperformance of India last year is, I think, behind us. So due to domestic factors, whatever reasons, which are well known, India underperformed the global markets last year. And that I don't think one should expect again to happen this year or going forward. So a lot would depend on how the global sentiment plays out. It's hard for me to envisage a huge India outperformance either. So I think we've sort of corrected for the underperformance last year, and from here on it would be more in line with the EM rally that if it happens from here on as far as India is concerned. And of course some level of outperformance can happen if the couple of key events that are slated for the next month or so turn out to be favorable, which is, as we all know, the UP election results and the budget.
So Amitabh, how are you positioning yourself, both as an investor as well as a trader?
I wish I knew the telecom space. We feel that even though the results have disappointed in the recent quarters, with the worst in the telecom industry behind us, and with the regulatory changes that have happened and are likely to happen, Bharti might clearly be a winner. And the stock has underperformed last few months rather, and in this market rally. So we would favor Bharti as a steady large cap play which should do well and have potentially delivered 10 to 20% return the remaining part of the year. And perhaps the other name that one could look at is in the IT sector is HCL Tech. which again has the potential to deliver further returns from here on.
So what is Amitabh Sonthalia's big call for the year 2012, and that we've already appreciated by 15 to 20% in quick time? How do you see rest of the year panning out?